Hi everyone. Let's quickly have a look at Indigo, Interglobe Aviation. It's one of the largest airlines in our country. This stock has not done much in terms of generating good returns for investors. If you see, it got listed around 16. It has pretty much been, just it's just it has been in this range. Uh, And as we all know, airline industry is facing a lot of troubles because of COVID. However, there is a contrarian trade that can be made in Indigo. So technically, this looks very good. It recovered from the COVID low up 124%. Now it's sort of consolidating and it's getting tighter on the right side. Volume is getting lower and lower. There is a reason for this. Fundamentally, also, there is a reason. So, we can make a calculated bet that selling is diminishing with volume going down significantly. Selling is diminishing. So, that is something that should be taken into cognizance. Selling is just diminishing day by day, week by week. So that is something that one can look at. Let's quickly look at the daily 50 sideways, pretty evident. It's been consolidating since November 2020. The 200 day has, almost caught up with the price. This is this is the base that it has been trading in 15-16%. So the trade can be this. One can initiate position within this range. This is the range that one can buy in between 1600 1750. This is the range that one can start accumulating this, and the stop loss will be below this. So stop loss will be dynamic. One is if it breaks below the 200 day with heavy volume and it starts trading below the 200 day on a weekly to weekly basis. So that is one reason to get out, or if it breaks below this, that's another reason to get out. So for the stock to break below this, I think it will have to break 200 day first. The 200 day is trending upwards, and you will have ample amount of time to trade out of the position even before a 16% stop loss is hit. So you can position yourself accordingly. All right, and that's about it on the technical front. What can we expect on the upside? So this is the all-time high. Once it breaks above it, there is practically no supply, so it can continue trending up. Also, a couple of airline stocks have been breaking out on the U.S. exchange and the U.S. market. So that could also be a clue, you know, just from a fundamental perspective. Let's quickly look at the fundamentals here. 66,000 crore large cap company. They have 54% market share, and it's trading below its enterprise value. Enterprise value 79,000 crore, trading at 66,000 crore. Something to keep in mind. Uh, Nothing much has happened with respect to FII DII because FIIs have increased, their stake DIIs have decreased. So this has been pretty much the same. But what's noteworthy is that uh, people's stake has gone down, public stake has gone down. Either FIIs or DI. DIs have reduced their stake. So essentially, FIIs have bought this 2% stake also. So there's very little share out in the market. 2% of 66,000 crores is 6 twos are 1200 crore. So very small amount of share is out in the market, and I believe that this can pop and have a very explosive move. So if you see the daily average volume of this share is 10 lakhs. So 10 lakhs into 720, 1700 is the price. 1700 crore divide by 2 because buy and sell. So divide by 2. So the actual value is 850 crores. 85 crores. So 85 crores worth of volume is happening on a daily basis on Indigo, and roughly only 1200 crores worth of shares are out with retail. Key thing to remember, guys, that all this doesn't get traded, and this does not get traded on a daily basis. So the public stake diminishing can be a very good thing from a technical perspective. Okay. So what else? If you see their gross block has gone up, so my guess is they must have bought some new aircrafts. This is the reason the gross block has gone up, and the depreciation has also gone up significantly. So when we come to profit and loss, if you see over here, they had operating profit last year, but because the depreciation has shot up so much, that resulted in uh, 234 crores of losses. And this loss is pretty evident because of COVID. But what we need to keep in mind that whenever the lockdown opens up and business is back to normal, even if we see 2 quarters of positive uh, um, positive earnings, that can really propel the stock higher. The fact that the stock has posted such heavy losses and it is still trading quite close to its all-time high is something to take note of. My guess is this can have a very explosive move very soon, and I'll be buying between these levels. Obviously, keeping a very tight stop loss. Lockdown is not open yet, but whenever lockdown opens up, this thing will just explode on the upside. Very highly likely that that can happen. So let's see, guys, how it unfolds. This trade is going to be a 3 to 4 month trade. It's not going to pan out very quickly. It might become volatile as well. However, looking at the fact that airline stocks are breaking out in US, chances of chances of this breaking out is also higher. So American Airlines, something that there is this sort of this has turned around, and this is sort of trying to break out. United Airlines, same stuff. It is basing and then trying to break out. So similar thing can happen in Indigo. Indigo setup looks much better as compared to these stocks. So this setup on Indigo looks much better. Let's see how it pans out. Thank you, guys.